it's been much ado about nothing for the past 2 years. There never was any inflation. Everybody says, oh, what are you talking about? Inflation was 8%. No, it wasn't. I mean, inflation is when there's excess demand, limited supply, prices rise.
Right.
What we had was currency devaluation. So post-lockdowns in 2020, they doubled the money supply over 18 months. Think about that. 244 years as a republic, $10 trillion. 2 years, $10 trillion.
It's not unreasonable to suggest that this may be the biggest development on Wall Street in 30 years. I mean, the last thing that was this consequential was the creation of the S&P index and the ability to invest in all 500 S&P companies via one trade at the same time. So this is very eagerly anticipated, but most of the money in the Bitcoin market right now is the hodlers and the traditional crypto investors. Mainstream investors, mainstream retail, mainstream institutions have not had a high bandwidth compliant channel to invest in this asset class until these spot ETFs. So I think in January, the approval of the spot ETFs is going to be a major catalyst that's going to definitely drive a demand shock. And then that will be followed in April with a supply shock because there are about 900 Bitcoin a day available for sale by natural sellers, the miners. And that number is going to be cut to 450 Bitcoin a day in April. So it's a pretty big deal.
Fiat is the primary tool for the kleptocrats, right? The people at the top, the few, to steal from the rest of us, right? If I can take a currency and I can devalue it in front of your eyes by printing more of it out of thin air, then I get richer. Now, if you take that away from me, because Bitcoin is a deflationary currency, not an inflationary currency, it actually goes up in value as the currency it's priced in goes down. Because let's remember, one Bitcoin, 21 million in the history of the world, probably less than that because some are lost or stolen. So 21 million, let's call it 18 million units. One Bitcoin will always be one Bitcoin. But it's not priced in Bitcoin. It's priced in dollars or yen or euros. And when we price in those currencies, we find that it is a perfect store of value, similar to gold. And that's the reason that the feds don't like it. The government doesn't like it. Ms. Warren doesn't like it. They are afraid of it. They're absolutely terrified that this perfect money takes away their, they believe, God-given right? It says, in God we trust on the back of the currency. But it's kind of wild and kind of crazy. And if you just stop for a second and think about it, and think about why do we let this small group of people control the price of money, we'd probably rebel. But we don't, because we're comfortable. We have pretty good high quality of life. The water runs, the heat works for most of us. Now, there are a whole bunch of people who are very uncomfortable, don't get me wrong. But on average, the average person has a pretty good life. And so they don't feel the slow, stealth wealth tax that is inflation. Because it's only 2% a year. What's that? Well, it takes half your purchasing power over a 30-year period. That's not good for you. Well, I mean, look, we're talking about opening up about 30 trillion, okay, round numbers, 30 trillion with a T. And, trillion is just a number that it rolls off the tongue, but no one really understands it.
How big it is.
To really understand it, you and I would have to sit here on air for 31,710 years and spend $1 every second. That's 1 trillion. So 30 of those units are going to be opened up on, I believe, January 8th next year when they crown the king on the king's birthday. That's my little thing. So I think that happens on that Monday. And when that happens, that $30 trillion now at UBS and Merrill Lynch and all these places that prohibit you from, use it. Here's the crazy thing. We live in this permissioned world, and yet we all tolerate it. right? We put our money in the bank. It's now the bank's money, and we can use it if they give us permission. And yes, they give us permission most of the time, but sometimes they don't, right? Imagine waking up in, the island in Europe, back in 2013, 14, where they took in Cyprus, where they took 3/4 of your money, right? Because they had lent money to a bunch of Russian oligarchs and it got confiscated. So
Lebanon.
Your money's gone.
Yep.
Or how about La Jolla Savings Bank? You put your money in, thought it was safe, and it's gone. So one of the things about permissioned worlds is they like that control. And what they really like, Paul, is they extract $7 trillion every year globally, from us in the form of accounting fees, audit fees, transaction fees. If I want to send you money, I have to have a bank account. You have to have a bank account. They charge me a wire fee. If I want to send you a Bitcoin, I punch a couple buttons and it's yours. So that frightens them to death because their monopoly on friction. So governments have a monopoly on violence. Banks have a monopoly on friction. And that's the first time I ever said that. I like that. And that monopoly is about to vanish.
Yeah.
And that terrifies them. And I think once we get the sense that, well, wait a minute, I don't have to live in a permissioned world. I tell a story all the time that, the first time I tried to transfer money from my Bank of America account to Coinbase to buy some assets. And we were early investors in Coinbase. And so I still use them. People say, not your keys, not your coins. I'm like, yeah, I know. But I use Coinbase because I like the business.
And that puts Bitcoin where a year from now?
Higher.
How much?
We could probably keep a bunch of economists and modelers working all day long to calculate the supply, demand, and price elasticity of this. I don't think we've ever seen, a 2 to 10x increase in demand combined with a halving and supply in a scarce, desirable asset that people want to hold for a long period of time. So I think we're expecting 2024 is going to be a major bull run for the asset class. We just don't know how far the asset's going to run at this point. Well, we will absolutely continue to acquire Bitcoin. Our strategy is to acquire and hold the Bitcoin, and we will acquire it by a variety of different means as long as they're accretive to our shareholders. So our goal is always to find a way to pursue more Bitcoin per share for our shareholders. And sometimes we do it with debt, sometimes we'll do it with equity, sometimes we'll do it with cash flows from the business. And of course, the volatility in the market just creates more opportunities for us as an operating company. And our particular business strategy allows us to harvest that volatility to the benefit of our shareholders. I think fair value accounting is a giant step forward for the industry. And up until now, corporations have had to invest all of their spare treasury reserves in sovereign debt. Sovereign debt normally has a compound annual growth rate of a few percent. The cost of capital for most companies is 10 to 12%. Bitcoin's got a compound annual growth rate of 40+% over the past 4 years, and even higher in the more distant past. So having a digital money like Bitcoin as a treasury reserve asset allows you to beat the cost of capital, and it turns your balance sheet into an asset instead of a liability. So we think this is a real game changer for corporations. I do think that the fair value accounting guidelines from FASB are just going to be good for the industry in general. They'll provide more transparency, and they'll be good for Bitcoin as an asset class and for Bitcoin as a treasury reserve asset for companies that have large cash flows that they want to carry forward. The ETFs are unlevered and they charge a fee. Microstrategy is an operating company, so we're fairly unique because we can generate additional Bitcoin via our operations, either via P&L operations or capital markets operations. And we can take advantage of intelligent leverage. Like we can borrow money at 0% interest for many, many years. And we did that with a convert, and then we can use it to buy Bitcoin. So you can really think of the ETFs as like shipping lines, very efficient, long haul, carry a lot of capital. MicroStrategy is more like an airline. We don't have the cargo capacity in our capital structure that a container ship has, but we can go faster and we have higher performance. So we provide you leverage and we don't charge a fee. And so if you can dig into our capital structure, you get comfortable with that, we offer sort of a high performance vehicle for people that are Bitcoin long investors.